Good morning. This is Wall & Broad. Of course, the big story today is the Twitter IPO. The social media company priced its shares last night at $26 at the high end of the recently increased range. The stock should begin trading at roughly 10:30 this morning and will be down on the floor of the New York Stock Exchange talking to their IPO guy, Scott Cutler, but that'll be a little bit later. Hey, if you think that's the only news today, boy, are you wrong. In a surprise move, the European Central Bank leader Mario Draghi decided to cut rates from 0.5% to 0.25%. And as a result, the euro immediately plunged. Joining me now is our economist, Joe Do. So, Joe, what is the significance of the move? I mean, it was completely unexpected.
Right. I think what it means is that Europe clearly is not in the clear, right? So we did see Spain come out with a positive GDP print just a few weeks ago, and so we said, okay, we're turning out of this recession. But we also saw the inflation indicator show that actually we're kind of moving further downwards, a slide further. The move is to offset that. We being the ECB, want to see a push in inflation, especially as the economy continues to sit in, flat to recession territory.
Now, on our side, we're kind of pushing our politicians to do the opposite. We're wanting to get out of easing and maybe start to raise rates to show that our economy is strong. Does this affect our decision?
I don't know if it affects our decision as much as us worrying about our own labor situation. I do think the Federal Reserve is keeping a tight focus on what happens in jobless claims. How do initial jobless claims look? The GDP print, we saw GDP came out at 2.8%, which was higher than expected. They were expecting 2%, and it was higher than the previous original print. All in all, I think when you talk to a lot of economists and analysts, they still do see March as the possibility when we begin to taper. As for interest rates, they say it over and over again. We are not headed towards higher interest rates, at least not in 2014, probably maybe the earliest 2015.
All right. Well, of course, our next big day is going to be November 14th when we'll hear from our upcoming Fed president, or maybe upcoming Fed president if all goes well, Janet Yellen. She'll be talking. But if you're seeing a story on the ECB and you're wanting to hit that thumbs up page on Facebook to say you like it with a thumb, well, you might not be able to do that. And Brittany Umar is here to tell us why.
Yes, like it or not, the thumbs up logo that we've all come to know is getting the boot from Facebook. The social network is redesigning its famous like button for the first time since its introduction in 2010. Now, Facebook has replaced its signature thumb with its F logo and made the blue background more pronounced on both its like and share buttons. Facebook software engineer Ray He said the site has already seen more likes and shares with its new design. Now, while a new button design may seem minor, consider this. The like and share buttons are seen more than 22 billion times a day on more than 7.5 million websites. Facebook is pairing the buttons together in a single embed, hoping websites will choose to use both. All sites that currently use the buttons will be automatically upgraded and they'll be rolled out to all users in the coming weeks. Back to you, Deb.
Oh, Brittany, I'm a little sad. I kind of like that big thumb. I like that. I thought that was pretty cool.
Like I said, like it or not.
There you go. Thank you so much, Brittany, for bringing us that. And that's it for Wall & Broad. We will keep you informed of what's happening with that Twitter IPO later today. That was Joe Do joining me, and I'm Deborah Borchardt with TheStreet.